Barclays analyst Dan was just on TV, and he basically admitted that he was wrong to raise concerns and questions about Elon Musk before, and that Elon's execution style actually turned out to be really good. It is not often that we see an analyst admit his mistakes like this, so I liked it, and he also had a few new things to say about Tesla stock as well. So let's take a look.
A bullish call on the street. Barclays reiterating its overweight rating on Tesla and $275 price target on the stock. Dan Levy, Barclays senior autos analyst. Dan, good to see you. So you think the stock still has significant room to rally. So what's the catalyst on the dot?
The call into the deliveries result, which we expect probably over the weekend, is that they're probably going to exceed expectations. We're forecasting 425,000 units of volume ahead of consensus 420,000 units. A lot of that is pegged to some of the production commentary that they provided and some assumptions on how production fared in March, and with the idea that inventory build is only going to be modest. And so we think that it could be a positive event and a positive catalyst for the stock, which has been under a little bit of negative sentiment lately, given some questions on demand.
In other words, it's a buying opportunity.
You expect additional price cuts. What about impact on margins, Dan?
Yeah, it's a very relevant question, and it's, I would say, for all automakers right now, the path to EV, you're dealing with two questions. One is the ramp on volume, but it's also a question on margins. But I think the key point for Tesla is that because they have such a significant cost lead, it's only natural that they're going to use or lean into their margin advantage or their cost lead to unlock further volume. In fact, this was a key message that we got out of the Investor Day a few weeks ago. They are going to try to drive costs down, and with that, they will unlock further volume. So it's only natural that they're going to lean into the margins to unlock volume.
There have been some opinions floating around that the Investor Day was a complete failure, but some analysts actually now understand that Tesla will keep cutting prices as it lowers the costs. I don't think that was widely understood. To some degree, it was understood, but not as much as it is now after the Investor Day. Clearly, Barclays understands that, and he's highlighting that Barclays understands that because of the Investor Day.
So, Dan, how big of a boost do you think potential further price cuts are going to be with demand? I know you're expecting 425,000 units for deliveries in the first quarter. What does the second quarter then potentially look like?
There's going to be a ramp in volume going forward. And I think the key point I would make is that they are ramping on supply at some of their other facilities, right? So the question of price cuts, it is natural just given some of the economic pressures that we're seeing. And we're seeing this broadly in the US market, right? I mean, US pricing as a whole for the US industry is starting to come down off of all-time highs. So Tesla is subject to the same sort of pricing dynamics that we see in the industry.
But for Tesla, look at the market share. Only Tesla is really growing market share more meaningfully, as you can see, 1.4% compared to everyone else, either mostly shrinking or growing just by a little bit. I'm not going to say the name of this company out loud because when I did that in the last video, someone in the next room thought that was being silly.
On top of that, you also get some ramp in volume at their new facilities, the facility in Austin, the facility in Berlin. As more supply comes online, it's only natural that they're probably going to cut prices somewhat to unlock that. I'll also point out that in the US specifically, first quarter, there was potentially some pull forward of demand given the dynamics of the IRA. This is the new legislation around the EV tax credit. And there was some temporary waiting period on when the full guidance is released. So in that time, they got full credit. There was probably some pull forward of demand. Remains to be seen what happens, but they're going to have more supply hitting. There will probably be some other price cuts, but just remember, there is some offset on the margins given additional fixed cost absorption, and also as raw mats are starting to moderate somewhat.
In terms of pulling the demand forward, that also happened at the end of Q4. Remember when Tesla gave everyone a discount of $7,500 because they wanted to sell out every single vehicle in the inventory in the United States of America, and people were not buying the vehicles anymore because they were waiting for the tax credits. There was some pulling demand forward going on as well. So if you always have that happening, how much of an issue is that really? And the inventory level in the US is not really bad at all. I think it's pretty all right. And remember, Tesla already increased the prices for the Model Y a little bit earlier. So we can discount the Model Ys further if we need to without reaching new record lows for pricing.
And Dan, there's always the Elon factor. An interesting heat map climate poll of 1,000 Americans showed that 36% said Elon Musk makes them less likely to buy a Tesla. And then there's the always present Twitter overhang that had quieted for quite some time. And as you know, it feels like it's very much back in the news.
Here's my takeaway from that poll. 2/3 of the people do not care about Elon making statements. That does not affect their decision negatively. 1/3 actually views that as a positive. I mean, when did you ever hear anyone say, oh, I got a Toyota because the CEO said this and that. I got the BMW because he said, oh, he loves these politicians. You never hear about any of that. In fact, I have no idea what they like or what they don't like. But it does happen with Tesla vehicles. Some people bought Teslas because they do like Elon and what he stands for. And the opposite is also true. Some people chose to not buy a Tesla vehicle because they don't like Elon Musk. But let's assume that the car industry globally gets to 80 million sales per year eventually. If Tesla does 20 million sales per year, that's 25% of the market. That means you still have 75% of other vehicles being sold. So I don't think we need everyone to like Tesla for Tesla to do well.
Is Elon a positive for the overall branding of Tesla?
Listen, Elon is certainly a core question. I go back to the notion, though, that for all the questions on governance that we've seen, and this was something that emerged late last year, this is still a company that has a leading product, leading cost, and they're going to use that to ramp on volume. I think another message from the company also at the Investor Day, the reason why they had, by the end of the Investor Day, 17 people on stage alongside Elon, was to show the depth of their bench. So yes, Elon is still a critical factor here. He is the one driving the vision. But I think the point is that there's more to Tesla than Elon.
Duh, that's so obvious.
Yeah, we've just never seen, Dan, an automaker with a polarizing CEO. So it's unlike anything we've ever seen.
You know what is also unlike anything else we have ever seen? Electric vehicles, until Tesla actually made really good ones. Another thing we have never seen until Elon, reusable rockets.
In your sense, though, is he a pro? Is he a con?
Tesla would not have done what they've done without Elon.
That's an honest answer. I like it.
So I don't think they would have gotten to this place. And there's a very fascinating history of Tesla that there were a lot of decisions that many of us, myself included, questioned along the way.
I like this honesty. That's good. This analyst seems to understand Tesla to a certain extent. That's good. And that was also him basically admitting that he was wrong to question Elon before, and that actually everything turned out really well.
Look, Tesla would not have gotten to the point where they are, taking some very unorthodox routes without Elon's guidance. So yes, certainly I can appreciate the fact that there are some questions on how Elon may be perceived, and the Twitter overhang was certainly
A buying opportunity. Sorry, I just had to, but you know, it's true.
I just go back to the product. It has a lead. They have a clear cost lead. I mean, Tesla is doing 17% EBIT margin last year. If you compare that to some of the other automakers, I mean, it's a clear lead over others. I'll just point out Ford, for instance, last week just reported that they had negative 40% EBIT margins on their EVs.
But that's not even the worst part. Here is the Model 3 ramp compared to the Mustang Mach-E ramp. Then production started the first quarter. Actually, in the first quarter, Ford produced more Mach-E's than Tesla produced Model 3s, but that changed in the third quarter. And look at the seventh quarter. What happened to the Mach-E? How come it didn't scale? How come it got stuck there for a while? Maybe, and this is just speculation, but maybe Ford figured out that selling more vehicles when you lose 40% each time you sell a vehicle is not a great idea. Now, there's a little bit more nuance in that minus 40% margin because that includes investments and things like that, but they are not giving us a gross margin number. Why? Probably because it's also really bad.
And while this is going to narrow, it's going to be a long path. And that's not specific to Ford. I mean, we're seeing that with others as well. The path to EV profitability is not easy. So Tesla has a lead in this regard.
If Ford proudly showed these terrible, horrifying numbers, really, what do you think other automakers have? Probably not better numbers, is my guess. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.